month. So together, they are putting in $500 per month. With this $500 per month, the mother and grandmother are contributing $6,000 into this account. $6,000 a year is going to give this baby access to $53,067 a year for 4 years. Let me say that again. The mother is contributing $250 per month. The grandmother is contributing $250 per month into this plan because they're using this cash value life insurance so that they can leverage the life insurance, so they can use it for themselves, so that they can become their own bank, so that they can have money in the event of an emergency. If this baby dies, the beneficiaries get over $1,000,000. If the baby continues to live on, the older she gets, the more coverage she has. If she becomes ill with a critical, chronic, or terminal illness in her lifetime, she's able to accelerate up to $1,000,000. We don't want this baby to get sick, and we do not want her to die early in life. However, if those things happen, the mother and the grandmother, who are both single women, they don't have to worry about money. All they need to worry about is making sure that this baby is healed. So again, let's say if the child does not become ill and the child goes to college at the age of 18, this child is able to have access to $53,000 a year for 4 years. 4 years. That is a total of $212,000 for college, for her first home, for her first car that she wants to pay cash for money for her business. It could be used for anything. And guess what? It's taken out in the form of a loan from the life insurance policy. So because it's taken out as a loan, it is considered tax advantage money. This child will not have to record that $53,000 a year that she's taken out for 4 years, which totals $212,000. She doesn't have to take that money out and claim it as income. It gets better. It gets greater later. As this child continues to get older, guess what? She is able to continue to contribute her $500 per month to this plan. And as she contributes the $500 per month into this plan and gets older, at the age of 55, this child can walk away from this plan. If she says, I no longer want this plan, I no longer want to contribute to this plan, this child is able to take out her surrender value. At that moment, her surrender value is over $1,000,000. So the insurance company is going to give her over $1,000,000 to walk away from the policy. And we're looking at the right column there, the far right column. Why would they decide to give her $1,000,000 to walk away from this policy at the age of 55? Well, because if she dies at 56, the insurance company is on the hook for $2.5 million to give to her family. So they made a deal if they can get her to walk away with $1.1 million. See, we're talking about building generational wealth. And when we're speaking about building generational wealth, it's not just about what we're doing today, what we're buying today. It's about saving for the future. Saving for the future generations. Your children's and children's children should be able to benefit from the things that you're putting in place. It's in the Bible. It's in a Beyonce song. I mean, it's everywhere. You should be making sure that you, as well as your children's children, are doing well. And the way that you do that is to make great decisions now as it pertains to your money. I'm going to stop sharing my screen right here, and I am going to ask Miss Mosley, how am I doing on time? How much time do I have? Hello? We good on time?
Yes, we definitely good on time. You could go all the way through.
Okay, good. Good. All right, so I just want to check. So going back to my presentation here. So The illustration that I gave you for the baby, it gets greater than that. It's even better than that. It really is. Let me tell you how, and let me tell you why. So, let's say the child continues to pay into this plan until she is 65, and she decides to have this plan as her retirement plan. She doesn't become ill, she doesn't pass away, she doesn't have to borrow the money early. She doesn't walk away at 55. At the age of 65, this child will be able to take out $261,000 a year for 20 consecutive years. Let me say that again, $261,000 a year in retirement money. I don't know anybody's 401k that's going to give them that type of return. $261,000 a year for 20 years. Tax advantage. What if she decides that she doesn't want to wait until she's 85 to get all of that money? At the age of 65, you'll see it's highlighted here. This child's surrender value is $2.4 million to walk away at 65. Because the insurance company knows if she does live to be 85 and she does take those withdrawals out of 261,000 a year, that will be a total of $5.4 million. So they will gladly give her a surrender value of $2.4 million when she's 65. Granted, all of this came from $500 a month. $250 from the mom, $250 from the grandmother per month. This money can be used however you would like for it to be used. It doesn't have to be used for one thing in particular. Now, I want to dive a little bit deeper because, again, we're talking about securing your financial future and making sure that you have the right things in place. So, when you are planning for the unexpected, you have to think about your mortgage. I want to put a pin here because I really want this to educate you on many levels. If you are a homeowner, put homeowner in the comment section of this video. Homeowner, okay? If you are a homeowner, you have something called mortgage insurance. Mortgage insurance makes sure that the lender is paid if for whatever reason you default on the loan. But you need to make sure that you have mortgage protection. The difference between mortgage protection and mortgage insurance is with mortgage protection, your family is protected. So if you become ill and you are no longer able to work and you have mortgage protection, you can submit your accelerated living benefits claim and be able to use that money to pay off your mortgage. If you are in a 2-adult household and you or your spouse pass away, the money from that life insurance policy can be used to pay off the mortgage. So if you do not have mortgage protection and you only have mortgage insurance and something happens to one of you, the lender will be taken care of, but your family is not going to inherit that house. So it's important for you to have mortgage protection. Also, car payments. Car payments are pretty up there now. They're about $700 a month. You want to make sure that you have extra funds to be able to take care of these things that affect how you live. You need your car to take your children to school. You may need your car for your business. Health insurance. Health insurance, unfortunately, does not cover everything, and it does not cover all cancers, which is another reason why you need to have the accelerated living benefits. College education. I just showed you an example in which a baby can have up to 52,000 dollars a year. $52,000 a year. She can go to a good school with $52,000 a year. She can go be a doctor or a lawyer or get an MBA or a PhD. That's good money for school. And then future retirement. Some of us want to retire early. We do not want to work until we're 65. We don't want to work until we're 75. We want to retire early. You can retire early if you have enough money to retire. So it's all about how you plan. So if you plan to retire early and you're saving enough so that you can retire early, it will become your reality. But if not, you won't be able to truly retire. You will be working, unfortunately, for the rest of your life. So, Terri, I hear you. You're like, Terri, you keep talking about the accelerated living benefits, but like what is a chronic illness? What is a critical illness? What is a terminal illness? A terminal illness is an illness in which the doctor said you have less than 24 months to live. A chronic illness is if you're unable to perform 2 out of 6 of your daily functions. You can't feed yourself, dress yourself, clothe yourself, etc. A critical illness is a heart attack, stroke, cancer, end stage renal failure, blindness, paralysis, aneurysms, AIDS. These are things that you can be diagnosed with that will affect your health. And if you are diagnosed with these, you're able to submit a claim and be able to have money to take care of you. As a business owner, it is important for you to not just have this for you, but everybody in your household. I see we have some extra people who have joined. Thank you for watching. I'm going to tell you here, this is very near and dear to me. I can't preach this enough. I can't speak about this enough because in 2020, both of my parents were diagnosed with cancer. My mother was diagnosed with breast cancer and my father was diagnosed with prostate cancer. Praise be to God, they are both cancer free. But you know what I did when they got their diagnosis? I increased the amount of accelerated living benefits I had on myself because I said, oh my goodness, life is truly unpredictable. And the thing is, you may know friends, family members, or you may even have it in your genes. You may know people who are on dialysis, who have end-stage renal failure. You may have someone in your family who have Alzheimer's. These things affect our lives. They affect how we do business. It's one thing to be able to say, yes, I want to have a 6 or 7 figure business and do all these things. But truth be told, if the people closest to you become ill, that's going to affect your whole financial situation. That's going to affect how much time you have to put into your business. It's going to affect how you do your business. I've been in business for years. I was full-time in my business for less than a year when the pandemic hit. I had to change my whole business model because instead of driving to meet my clients, I had to turn to Zoom and work virtually. You know why? Because there was a pandemic going on. And because my parents were ill, mostly my mom, my parents are divorced, so I spent most of my time during that time with my mom. I couldn't afford to put her in danger, to put her health in danger. So I had to find out how to operate my business and make sure she was taken care of. My mother, who lives in Mississippi, wanted to get treated at MD Anderson in Houston, Texas. So in 2020, I spent a lot of time driving back and forth and working my business virtually. That's why it's important for us to have these conversations, to be a business-minded creator. You have to not just be creative because it's cute, but you have to be creative so you can have consistent cash flow. And that's why I'm here. I'm here to be able to share with you ways that you can protect what you have and also be able to understand other resources and products and services that are available to you so that you can secure your finances, plan for the unexpected, and build wealth at the same time. So let me ask you this. Where is your nest egg? I've spoken about retirement here and there, but where is your nest egg? Is your money in banks, insurance companies, gold, silver, stocks, bonds, mutual funds, cryptocurrency, real estate, treasuries, bonds? Where is your money? And is your money safe? I encourage you to do some homework. For those of you who do not know my story, before going full-time in my business, I served as a STEM school principal, a STEM academy principal. Before I was a principal, I was an instructional coach for science and social studies teachers. Before that, I was a science teacher. So guess what I'm going to do on tonight? I'm going to give you homework. Your homework is to take inventory of all of your financial products. Take inventory of every single thing that you have. Where is your retirement nest egg? You want to retire in 15 years? What do you have in place to make it happen? You want to hit another six figures in your business, or you want to hit six figures for the first time in your business? What do your assets look like? How are you paying yourself? If you have an unexpected event, where will you pull money from? If there's a great opportunity that comes to you and you want to invest into that opportunity because it's going to increase your cash flow in your business, where are you going to get the money from? You need to know exactly where you are financially so you can understand what it's going to take for you to get to where you want to be financially. Where is your nest egg, and is your money safe? Right now, the market is very volatile. I'm not going to speak about how to invest in stocks and mutual funds. I'm going to speak to the ones who want to protect their money against the stock market losses and share with you that there are some ways that you could still have stock market like gains without accepting all of the risk. Okay. So, where does your retirement income come from in an unstable world? I know we have men and women of different ages here. Social Security, pension, IRAs, 401ks, life insurance, annuities, real estate rentals. Do people have the ability to pay, or are they defaulting and moving out? Where is your retirement income coming from in an unstable world? When you are building, the title of this presentation is Building a Secure Financial Future. In order for your financial future to be secure, you must know what you have and where it's coming from. What's coming in the future and what do you have now? What's going to stop? What is guaranteed? What is non-guaranteed? You must have a plan in place. You are never too young to plan for retirement. You're never too old to plan for retirement. And again, as we're thinking about generational wealth, we want to think about our children and our children's children. But if our parents are living and our grandparents are living, we want to think about them too. Because if they're not set up properly, they're going to have to come live with us or go to a nursing home, which is very expensive. I have a client whose mother lives in California, and her mother, and she's a business owner, her mother has Alzheimer's and her health is declining. They pay, and I say they because it's the client and her siblings, they pay $9,000 a month. $9,000 a month for their mother's nursing home expenses. Are you planning for that? That's why you need to know about these products. That's why you need to plan not just for today, but for tomorrow and the unexpected. And when you're planning, you're thinking about the generations before you and the generations after you. Now, I know you may say, Terri, that is hard. All of this is a lot. This is a lot, Terri. How am I supposed to do all of this? How do you eat an elephant? One bite at a time. But this is also why you need to have a financial consultant, a financial coach, a financial expert to actually guide you through the process. As a matter of fact, you need a financial team. I'm a financial consultant. I do financial coaching. But in addition to working with me, you also need a tax strategist. You need a virtual CFO. You need a CPA. You should have a financial dream team because it is that important for you, for your business finances, as well as your personal finances. While I'm thinking about it, before I go on to the next slide, if you are a business owner and all of your funds are in the same account, your next homework assignment is to separate those accounts. There's a method that I use called Profit First. And the way that you're able to know exactly how much money you have coming in and how much money you have going out is to make sure that you have separate accounts. You should not have all of your money coming out of the same accounts. You should have at least a personal business account. I'm sorry, a personal checking account, a business checking account, a business savings account, and a personal savings account. You should, as a business owner, you need at bare minimum 4 accounts. You need to pay yourself from your business checking account, and all of your business expenses should come out of the business account, and all of your personal expenses should come out of your personal account. You should not commingle funds. Now, I'm not speaking to you as someone that judge you if you do. I did it. When I first started my business, I was in survival mode. I went from being a principal to being a full-time business owner. In the midst of the pandemic, I was in survival mode. I knew what I needed to do, but I just kept putting it off. I was like, oh, I put it off, put it off, until I actually sat down and was like, okay, let me get this right. And then when I sat down and I got it right, then I was truly able to see where I was financially in my business and where I was financially in my personal life. And then I was able to make better financial decisions. Then I was able to get out of debt. Then I was able to build a 5-bedroom home on self-employed income as a single woman. Okay. So it was then that I was able to make better financial decisions. So again, I'm not coming to you, speaking to you as someone who is perfect, as someone who comes from a line of business owners and entrepreneurs. No, I'm telling you what I know because I have learned these things, and I want you to understand and learn these things as well. So if you don't know, you're going to learn tonight that there is only one product in the world that guarantees income for life. Does anyone know what the name of that product is? Okay, I'm going to see we're getting close to the hour, so I'm going to speak about this quite briefly. It's an annuity. Annuities have beautiful benefits. You have a higher potential for return on your money. A fixed index annuity has no stock market risk of loss. You have tax deferred interest. You have lifetime income options. You have minimum guaranteed returns, and you are able to avoid probate. If there's anyone who is listening to me and you are retired and you are receiving over $97,000 in retirement income, you may have already gotten a letter. If you have not gotten a letter, you will get a letter about something called IRMA. Very briefly, I will share that it is an additional expense that you have to pay because the government is saying in order for you to get your Social Security, you must enroll in Medicare. And then this is an extra tax. Well, the government don't want to call it a tax, but it's an actual extra expense. And it's a monthly income adjustment, which means what you thought you were going to be getting paid, you're going to be getting paid less because now there's an extra expense on top of the expenses. Another thing is too, just in case you are not aware, if you do have your money in a 401k or 403b and your money is there when you do retire, you do have to pay taxes on that money. Okay? How can you avoid some of these IRMA issues or this income related monthly adjustment amount is what the government calls it, is you can actually have your money be paid to you from products that are offered by life insurance companies, life insurance policies, and annuities. Okay. If you don't know what those things are, please feel free to reach out to me. I'll put my contact information there at the end. And I also encourage you all to do your research and again, reach out to me if you have any questions about it. But this is a thing that's affecting our seniors and we have so many baby boomers that are turning 65 every day, that this is something that's going to affect us all, even those of us who are not in a traditional work setting. As business owners and entrepreneurs, we have to think about what our products are and who we're serving. And if we are serving that population, we have to think about the fact that their financial situation is going to change too. So we have to think about the whole picture. So I'm going to kind of speed through this and go to the end. So we talked about risk tolerance. We talked about asset diversification. I'm going to give you this example. I'm going to show you a couple of examples of how an annuity may or may not be a great fit for you. So here's an example. I have a client, and with this client, she said, Terri, I am getting ready to leave my job and I don't like how my 401k has been performing. And so what we did was we moved her 401k into a fixed indexed annuity. And she has a new job, but with this money, she said, I just want to protect this money, but I don't want to pay taxes on it right now. And I still want some growth. So we were able to roll this money over into her own qualified IRA or fixed index deferred annuity. And with this 81,000 that we put into the account, you'll see here, if this account performs like it has been performing in the past, when she turns 50, let me move this here. When she turns 54, her total benefit from this account, benefit value is $3 million. She's 31. Well, yeah, she's 31. She hasn't turned 32 yet. She's almost 32. But $3 million. Now, what I love about annuities is that they can actually guarantee you lifetime income. So let's say if she does decide at the age of 50 that she wants to receive income for life, she's able to receive $38,908. But here comes that accelerated living benefit thing again. If she is chronically ill, this company is going to give her double for her trouble for 5 years. So instead of her getting 38,000 a year, she's going to get 77,000 a year for 5 years. She only put in 81,000. Is this good? If this is good, put a good, this is good in the comment section. If you are watching the replay, again, put hashtag replay in the comment section. If you have questions for me, please let me know, because I'm sharing with you. These are ways that you can protect your funds. Maybe you're going from being an employee to being a full-time entrepreneur, and you're curious about where you should put your retirement dollars. Should you use some of it for your business? Should you diversify your portfolio? How can you make sure that you're making wise decisions as it pertains to your money? You have a financial consultation, okay? So I'm going to show you this. I have another example. This is from a gentleman. He is 56 years old, and he was moving from one company to another company. He said, okay, Terri, I plan to retire about 65. I do not like how my 401k has been looking. With this account, when in 10 years at the age of 66, that 400,000, now notice he's closer to 65 than my friend, but in 10 years, his money has more than doubled. With this product here, he's looking at having over $1.1 million. But also, this product has a bonus. So in that first year, once it's issued, he put in 400,000. He instantly gets a bonus of 20,000 by just moving the money. Incredible. Incredible. And notice, he doesn't have to add anything else to the account. He doesn't have to add anything else to the account. He can just put his money there and know that his money is safe. So there are 3 ways that you can work with me. You can hire me as your financial consultant. I will tell you to have your first discovery call. There is no fee. I want to do a financial needs analysis with you for free. I do have a Facebook group for women who are business women who are looking to build wealth. I want to invite you there. And thirdly, if you happen to be available on October the 28th, you can work with me in person. I'm going to have a luncheon. It will be 4 hours from 10 a.m. to 2 p.m. in Hurst, Texas. Hurst is a suburb of Dallas. It's going to be amazing. So the next steps are to set an appointment, complete a needs analysis, and complete the application. Again, our luncheon is going to be amazing. We are going to focus on mindset, money, and movement. The type of mindset that you need to be a wealth building woman, what you can do with your money to turn your money into more money, and also the types of moves that you want to make to go next level in your business. You can register at jointerri.com/luncheon. And then last but not least, I would love to hear your feedback. I really, really do want to hear your feedback. So you can scan the QR code and do the survey for me so that you can give me feedback so that every time I get an opportunity to speak, to teach, to educate, to train, I can make sure that I am serving you as best as you need to be served. So I thank you for this opportunity to speak on tonight, Miss Mosley, and I will turn it back over to
Oh
you.
yeah, well, I was going to talk to you for a minute. So
Yes,
just
ma'am.
yeah. So pretty much, so obviously, it's some people on here. They more than likely watching. I don't know how many of them got 401ks or different stuff. But what if a person just they don't have a 401k, but they have some form of savings that's sitting in the savings account? Would you suggest that person transfer over to an RIA?
Great question. So it's all about diversification and liquidity. So I talked about the good things about the annuities and the IRAs, but some of the things that you want to consider is that if you put your money into an annuity, you usually have surrender charges. So if you want to take out more than 10% of what is in that account in less than 7 years or 10 years, depending on the length of the annuity, then you can incur annuity fees or early withdrawal fees. So let's take, for example, let's say you have $50,000 in your savings account and it's just sitting there. Well,
Right.
because the dollar is losing value every day due to inflation, that $50,000 is not going to be worth the same next year this time. So why not grow what you have in your savings? But if you feel like you need that money, don't put all of it into the IRA or the annuity. Don't. I am not the person that's going to say, take all that money out and put it in this one. No, you really need to ask yourself, how much of this can I afford to have in an account and not touch? Because again, with the annuities or the IRAs, unless you are getting an income generating annuity, your goal is to accumulate more money. So you want to keep it in for at least 7 years. So if a person has like 50,000 in their savings account, they may want to put in 25,000. Leave 25,000 in the savings and then put 25,000 into the IRA or the annuity so it can grow for them. But if they do have an emergency, they can go and they don't have cash value life insurance or they don't want to take a loan, then they can take out the money out of the savings account without having to touch that annuity. Because again, the goal with that is to be able to grow your money and keep it in at least 7 to 10 years. If you take money out, you don't want to take out more than 10% per year.
Okay, sounds good. Students, are you on here? I need you just to say hello to me in the chat so I know that you still on here. Even though we look like we're gonna be ending soon, I will still give you the full time that I told you guys based on when you came in because I seen some of you guys didn't get here to about 7:30 plus. So, but I wanted to see who was here. Go ahead and write in the chat so that I can see who. Hi, Maya. I see you, Maya. Maya, did you find any of this information interesting? You can write in the chat. But yeah, so I would definitely, I think that I always was interested in doing the RIA, Terry, but I was like, oh, I don't know if I should do it. Shouldn't I do it? Especially with me, about to get my federal funding and gonna have more money that I could do different stuff with. So I think that's definitely going to be an option for me looking into the future. So I'm gonna have you girl do mine. So
Oh, great, 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 great.
so might as well have you do mine. So that way I don't have to worry about it. So, is there any more information? So, Maya and Natalie, you two are the only ones who I'm counting for the full time for. Everybody else, I'm gonna assume that they're not here. Hi, the person say I'm not a student, but I'm here. Hi, I can't see who you are. They're not showing me your name. So I don't know what platform you on, but thank you so much for coming on here. Did you find this information interesting? Do you think any of this information helped you? Hello, other Facebook user. I don't know who you are because I can't, from where I'm at, because y'all not registered in. I can't see some of the other people who because they must have registered in so I could see them. But thank you so much for coming in. Hopefully, this information was good for you guys. My goal is to make sure that I'm able to, bring people on. So, oh, good. She found it very informal. Yeah, it was interesting and helpful. Y'all reach out to Terri if y'all got y'all business, or y'all have 401ks and y'all leaving y'all job because y'all starting your own business. So that way you don't just leave your money sitting out there. You know what, Terri, my sister, she told me like in the summer, she was like, they contact me because I got this money sitting in this 401k from this old job I had a while ago. That, sometimes when people leave their job, they leave their 401k, and I don't know why they don't think that comes with them. But
No, it's like leaving your old clothes at an ex's house or your
right,
electronics at the ex's house. Like, why would you do that? Move
right.
it. Take it with you. Take it with you. Is it okay if I drop the link for
Oh,
the
absolutely.
survey?
Oh, yes.
Okay, and I see I'm able to see on the Facebook group. I see Mo Val said yes, it was interesting and helpful. And I see it says Benita. Thank you very much. So with your permission, I'll drop a link so that people are able to do the
Now,
survey.
if you can
Also
drop
have
it, because I'm on more than one platform. So if
Mhm.
you can drop it in the studio, it'll go to all of the different platforms. Because like the students, they're on a different platform than you see Benita and the other people on. So
Wow.
then that's why some people they're not even registering on here. So we can't see them up here. But when you drop it, it'll go everywhere. It'll post it on every platform.
Got it.
You
Okay,
see
perfect.
where you can chat in the on your right hand side where it say all
I see private
it,
chat.
in the studio. You can see where the chat's going along the side, all the way at the
Yes.
bottom where you if you post there, you can post to all. That probably be the best, so it'll go everywhere. Yeah, I did see Aaliyah chat say her computer was froze at the time. So I'll count you guys in for the end. I don't see Sergio. I see he originally clocked in, but he's not responding back now because I see people been coming and leaving. So
Okay. Well, that is awesome.
okay, good.
I have a free gift. I'll send you the link so you can send it out.
Okay, Sergio, go ahead and show up.
Sergio said he's there. Hey, Sergio. Nice, nice, nice. I'm so glad that I was able to do this, and I'm glad that people found this to be informative.
Yep, absolutely. So, students who on here, I will just count you for the whole time that we talked about, and hopefully, y'all found this very informal. And yes, I definitely found it informal. Especially like for me, girl, I could do a wig and I could talk about beauty all day, and I could do all type of marketing, advertising. But when it comes to finances, that is not my strong point. Trying to figure out where to put your money for the best profits and other than because I know sending your money in the bank, your money not doing nothing. You look at that 0.01% that you're gonna be earning, and you like that ain't nothing. Okay, you can have $100,000 in the bank and you ain't making no money on it.
Mhm. None at
So,
all.
yep. So that is one of the things that. So if you are done, Terry, we could wrap this on up.
Sure. Well, again, thank you all for being here with me. I'll go ahead and share my screen one last time so you can have my contact info. And if you have any questions, please feel free to reach out to me. You can follow me on Facebook, Instagram, and LinkedIn under Terri Alford or TNA Financial Group. You can scan this QR code here and be able to get a free gift. And my phone number is there, 682-305-1593. Just text me and let me know that you heard from me here, and I can let Miss Mosley know that you reached out, for those of you who want a little extra push, extra credit. Well, thank you again, and I hope you all have a blessed evening.
Bye.
Bye.